What's up guys, this is Danny from Rethink Peer-to-Peer Lending. In today's video, we are reviewing the changes of my personal peer-to-peer portfolio from January, as well as which developments have happened to a number of platforms. So without further ado, let's jump right into the portfolio update from last month. Overall, I was able to earn 418 euros from my peer-to-peer investments, which is the third consecutive month with more than 400 euros in a row. A new personal best was achieved at Esketit with 30 euros and 11 cents. The performance table is led again by PeerBerry with 12.79%, which is also a new personal best for me on the platform. The same applies to Twino with 10.28%. Estateguru, on the other hand, saw another dip downwards. Here my total return dropped from 7.9 to 7.7%, which is the lowest return I have had since October 2019. The red lantern, however, remains with Bondora Portfolio Pro at 2.27%, which I come back to in a moment. Overall, I had 3 transactions in the previous month. I invested 1,000 euro each on PeerBerry and on Esketit. On the other hand, I was withdrawing 1,000 euro from Twino. The value of my outstanding peer-to-peer portfolio increased from 61,174 euros to 62,587 euros during the month of January. In terms of my goal to reach an outstanding portfolio of 160,000 euros by March 2027, I am currently 3,189 euros below target, and my performance delta has also increased to 2,378 euros, which illustrates the insufficient return on my set 10% target. Next, we are looking at the most important developments from 6 different platforms. We start off with PeerBerry, where 52.4 million euros have been facilitated in January, which is the highest amount since February last year. The repayments of war-effective loans reached 33 million euros, which equals 66% of the outstanding portfolio, which was at risk 12 months ago. In order to fuel the growth of the platform, the supply was now strengthened with a new Aventus Group loan originator from Spain, which offers investments into real estate. I can share also an exclusive information that PeerBerry was telling me, which is that most likely in March, also a Czech lender from the Aventus Group will be onboarded on the PeerBerry platform, where investors can then fund short-term consumer loans. Next up, we are looking at Bondora, where of course we need to address the recent ending of both portfolio builders, a decision that doesn't come off as a big surprise by now, since I was pointing this out already in a video last year. A few weeks ago, we received the official communication that it will be no longer possible to invest in Portfolio Pro or Portfolio Manager as of February 27th. However, trading those loans via secondary market will remain possible. In the end, it was just a matter of time when it would happen. The only thing that seems a bit surprising though is the sort of flimsy explanation by Bondora. Over 96% of all investments are made via Go and Grow. This has made it clear that most investors opt for this effortless way to grow money. And yes, it is true that since November 2020, more than 90% of new loans have been attributed to Go and Grow. This was mainly due to a Bondora decision to allocate new loans proportionally to the investment products used by investors. A decision that from an outside perspective is understandable and that makes sense.
When we looked at it, we saw that relative to the number of active investors per product, there was a much higher share of loans in the portfolio going to customers using Portfolio Pro and Portfolio Manager relative to the active users. When you compare it to Go and Grow, of course. So we made some changes to reflect the distribution of loans to the active segments of users. So within Go and Grow and Portfolio Manager and Portfolio Pro. And that's why that around a month ago, some users would have noticed if they're using Portfolio Manager and Portfolio Pro, that the amount of loans available for their portfolio or new investments that they could acquire suddenly decreased or changed.
The untold truth is here that with this decision, Bondora has willingly ended the path of the two portfolio builders themselves. Because if fewer new loans are available, the less investors can invest their money via the two investment products. The result was a cash drag situation that many investors complained about for months, who then withdrew their money and thus further reduced the demand. In addition, Bondora also consciously decided to not offer any new Dutch loans to the portfolio builder products, and at one point new investors were no longer granted access to the portfolio builder section as well. From this perspective, we have to conclude that the final discontinuation of Portfolio Pro and Portfolio Manager was primarily a decision forced by Bondora and only secondarily a development driven by investors. As far as the reasons are concerned that have led to this decision, I have been pointing out potential performance issues of the loan portfolio several times last year. To sum it up, Bondora is now switching 100% to their automated black box products Go and Grow and Go and Grow Unlimited. What do you think about this development? Please let me know your thoughts in the comment section below. Then we look at a platform where the default rate has increased from 8 to 35% in the previous 12 months, namely Estateguru. In absolute numbers, there are now more than 100 million euros in the collection process, and if you think those numbers can't get any worse, you might be wrong. According to Estateguru, the defaults of the current portfolio will only start to go down again in the third quarter, and at the same time the expected transaction volume will decrease by 20%. The situation looks particularly bad in Germany, where already 85% of the portfolio went to recovery. Estateguru outlines on the blog that German borrowers are apparently taken advantage by the operational changes at Estateguru and use this as an opportunity to suspend their repayments completely. Obviously, this is a huge mess that the company is in at the moment. My personal hope is that the platform will now finally abandon the path of goodwill and dialogue and instead force a strong hand and also legal actions against this behavior if they want to regain any trust from investors. Next up, we are looking at Esketit, where 18.4 million euros were facilitated in the first month of 2023. This is not only a new record for the platform, but also the 5th month in a row in which more loans have been funded compared to Bondora. If you consider the comparatively young history of the platform, this is quite a remarkable achievement. However, the high demand also has its price, since now the interest rate for all Jordan loans have been lowered to 12%. The Jordan originator, Money for Finance, was able to issue 43 million euros last year while generating a profit of 6.6 million euros. Also, the cashback bonus for new investors has been cut to 0.5%, which goes to show that the platform is now trying to take its foot a little bit off the accelerator. So let's see how this will impact the financed loan volume in the coming weeks and months. Then we are looking at Lande, a platform that, according to the latest monthly evaluation by peer-to-peer market data, has been the fastest growing peer-to-peer platform in the last 12 months. Of course, we should take into account that a relatively high jump in growth is always easier for a relatively small platform, but without taking anything away, I think it's a good indicator that shows that the popularity of Lande has definitely increased. Despite the low demand from borrower side and hence lower supply, there was still 558,000 euros financed in January, which is about 60% more than in the same month last year. As far as Lande's expansion is concerned, I have been informed that some non-Latvian loans are expected to appear on the platform fairly soon, and a larger boost in loans is expected in March, when many farmers will take advantage of the seasonal financing products. And last but not least, we are looking at income, where the Latvian lender Finto Capital was now exiting the marketplace since they were able to attract a cheaper long-term funding source. As a result, all Finto loans were transferred to buyback status on January 17th. The plan was to repurchase all outstanding liabilities within a period of 2 weeks, a deadline that was met and all outstanding debts were settled. So we can see for once that the exit of a lender does not always have to be associated with a negative background due to repayment difficulties. Alright, that's a wrap for this week's video. I hope you guys enjoy this kind of content, and if you do, then please make sure to subscribe to this channel to also get notified for future videos. So long, take care guys, and I'll see you in the next one.